It's Jay Meisler here with the Forex trading outlook for the week starting October 7th, 2014. I'm replacing the FX trade today with the weekly outlook, but the market seems to be trading in weekly episodes, and I think we can lay out a scenario for the week and decide to trade at the start of the week. I may do an intra-week update, but for now, I'm going to do a week ahead. I think it would work out very well. For those who have followed me since the, especially since the my monthly outlook for October, and again last week, as I said, the pattern in the euro dollar has been, and really for the dollar in general, but the pattern in the euro dollar has been, I call them tepid retracement trades that don't either go far enough or don't last more than a day, and they're followed often by new lows or dollar highs. And this was the case on Friday. Of course, you couldn't anticipate the non-farm payroll number, although if you put them together with August and September, came out to be a 214K average. So we're not talking about an acceleration in employment, but a strong number keeps the Fed on track to tighten rates middle of next year at least, and perhaps earlier if the data supports it. You can see what happened in the UK. Seems they're pushing back the date of tightening, and that seems to have undercut sterling, which was basically bought as the first out in the tightening process, and now it seems to be pushed out. You saw sterling has been undermined by that, and a generally strong dollar. So look for the week ahead, as always happens. It generally happens after non-farm payroll week. It's a light economic calendar, so really nothing to change the outlook, and therefore nothing changed the outlook for the dollar. The market is looking for reasons to buy the dollar, as you see on Friday what happened. Now, if you look in the euro dollar, as I've been talking about for the longest time, the break here of 126.62, there's a little support here. I think it's 124.15 to 121.50 to 124.50 basically, but really, if you look at it, 120.40 is the next real key target in a daily chart. As I've also been mentioning, if you look at the 4-hour chart, which I've been using as my trading bias, which just remains bearish on the euro, the trend line and the 100-period moving average continue to guide my bias. As long as we stay below this thing and the angle remains down, I will stay bearish. Now, if you look at the 1-hour chart, it's pretty clear what the key level is. It's 125 on the downside, but there's very little below it. On the upside, you got resistance here at 127, 527.80. You should not go above this level. And in fact, there's resistance at 125.50. So if we stay below 50, this stays safe and the risk stays on 125. Question is, does it cap through it? On Mondays have been tricky, as they have often been known follow-through days. We'll see how hard 125 is being defended. Otherwise, if 125 gives way, there's very little. I would say 122 will be the next target, with 123.50 being the midpoint. So for the week ahead, you have FOMC minutes midweek. That is probably a key event, as the market, as I said, looking for reasons to buy dollars. Otherwise, we have the hangover from the non-farm payroll action. And the question is, do we need another retracement for a new low, or do we make the low early on Monday and then consolidate? It really depends on whether there's a bid there at 125 or there are stops. But as I said, stay bearish as long as you're below 125.70 to 80. Only above it would suggest more of a retracement risk. And that's my outlook. It hasn't changed. Looking to sell upticks in the euro. The lower it gets, the harder it becomes, but the hard trade is often the right trade. So keep that in mind. I'm also, just to let you know, and you'll see this coming up, there's a link here, and I'll put it in later on, right over here. One of the leading Forex brokers has lowered its spread and changed its pricing model. I think it has implications for the industry in general. Spreads do matter. I wrote a really good article on it. I want you to read it. So I'll embed the link in here. Just click on this link and you'll go to the story, which we have an open access for. So otherwise, good luck at trading. As I said, for the week ahead, the bias of dollars should remain up, barring any any bout of risk aversion. That seems to be the only thing that seems to be causing the market to pause. Otherwise, the risk is still on the upside for the dollar as long as the Fed remains on course to tighten, at least by the spring of 2015. So, good luck, good trading.